Forget everything you thought you knew about silver. The old rules are shattered. After a staggering 147% surge in 2025, silver didn't just crawl to new all-time highs, it exploded. We've just blasted past the $90 an ounce milestone, a barrier many considered a fantasy just a year ago. But this is not the peak. This is the launchpad for a move that will redefine the precious metals landscape. We are witnessing only the beginning of a truly historic repricing. The big banks, the same institutions that dismissed silver as poor man's gold, are now waking up in a panic. Citigroup is publicly calling for $100 silver by March 2026, a forecast that seemed impossible until now. But what the banks are admitting is only a fraction of the story. To understand what's coming, you have to look past the headlines and follow the cold logic of algorithms. One specific quantitative model, analyzing market data without bias, is forecasting an almost unbelievable number, $387 per ounce by mid-2026. That represents a potential 300% gain from current levels in months. Is this reckless speculation or mathematical proof that silver is finally breaking free? Here are 5 undeniable signs the silver supercycle is here. First, the supply crisis is no longer a forecast. It's a reality. For 5 straight years, the world has consumed far more silver than it has mined. This is a deep structural deficit that is rapidly draining global inventories. Experts at Fitch BMI have confirmed this deficit will likely worsen through 2026. Mine production is failing to keep pace as ore quality declines in key nations like Mexico and Peru. At the same time, physical inventory is simply vanishing. Vaults in the critical hubs of London and New York are reporting historically low levels. This has caused lease rates, Wall Street's fire alarm, to spike. It's now extraordinarily expensive for anyone to borrow physical silver, signaling a terrifying truth: the metal simply isn't there for the tidal wave of demand that's coming. Second, the demand explosion. Silver is no longer just a metal for jewelry. It is now a strategic industrial metal. Its demand is being supercharged by 2 of the biggest technological revolutions in history: solar energy and electric vehicles. The International Energy Agency projects that by 2030, solar panel production could consume a massive portion of the world's annual silver supply. Every solar panel needs silver's unmatched conductivity. At the same time, every electric vehicle uses between 25 and 50 grams of silver, far more than a traditional car. This unstoppable, price-insensitive industrial consumption is creating a powerful price floor, forcing a head-to-head battle with investment demand for the exact same finite supply. Third, the charts are screaming confirmation. For those who follow price action, the message is undeniable. After a brutal decade trading sideways, silver has violently broken its chains. The surge past long-term resistance at $85 and now $90 an ounce isn't just another rally. It's the technical confirmation of a new bull market. A powerful support base is now established above $80, creating a foundation for the next leg up. While short-term indicators might flash overbought, that simply reflects relentless buying pressure. Once silver breaks a long-term consolidation like this, it historically outperforms nearly every other asset. Section 4. The Expert Chorus. Fourth, the Expert Chorus. Experts who once dismissed silver are now being forced to react. After years of being overshadowed by gold, major institutions are scrambling to catch up. Citigroup's $100 target is just the start. Respected thinkers like Robert Kiyosaki see a path to $200 silver. And then there's the forecast from the CoinCodex algorithmic model. Analyzing market data without human bias, its data-driven projection is what should keep investors up at night. $387 by mid-July 2026. This number shows the explosive potential when historic demand collides with a deep supply crisis. This situation is accelerating. The numbers you just heard are changing by the day, sometimes by the hour. This analysis could be obsolete in a week. To stay ahead of this story and get the latest data-driven updates, subscribe now and be sure to hit that notification bell. You do not want to miss the next critical update. The fifth and final sign is the macro environment, acting as pure rocket fuel for silver. The Federal Reserve is widely expected to cut interest rates, meaning a softer US dollar is on the horizon. A weaker dollar makes silver more affordable for global buyers. So when you assemble all 5 pieces, the case is undeniable. 1. A structural supply deficit. 2. Unstoppable industrial demand. 3. A confirmed technical breakout. 4. Bullish forecasts from experts and algorithms. And 5. A powerful tailwind from a falling dollar. The road to 100, 200, or even the stunning forecast of $387 will be volatile. It's designed to shake you out. But the data is clear. We are in the early stages of a historic repricing of silver.